Hey everyone, Dalton Grados here with another weekly newsletter for this week of July 21st to the 25th. And first, I really just got to say thank you so much for all the new subscribers. It has been every single day I am getting new subscribers on my newsletter. So if you're watching this here on YouTube, it's the first link in the description, my free market newsletter that goes out every week to your email inbox, where it's just like this. I just talk about the market and prep for the week ahead. And every single day, I've been getting new subscribers to that newsletter. It's really been quite amazing to see because it's really just been a quiet newsletter I've done on my own for whoever will listen. And now it's just growing a lot. And unsolicited by me, I got on Gregory Manarino's recommended list, which is where a lot of the new folks have come from. So that's really cool to see. And I'm thankful to Gregory for that. I've never spoken to Gregory, but that's really cool, and I'm glad to have everyone here. So let's look at the market going into this week. We're looking at the ES futures, which is what this newsletter is based off of because we trade the ES, the S&P mini futures. These are our same levels that we have had up for the past 2 weeks, the same levels here on the chart. As you can see here, the market really hasn't done much, okay? It's summer, there's not that much earnings, it's lower volume, and we're really just consolidating around the all-time highs, right? These are the previous highs, right around 62.87, and we're really just consolidating around there. The 6,300 level is really a big level, if we mark that on the charts. And we've creeped on up towards the 6350s, which we marked as our next logical level, right? So at all-time highs, our big round numbers are going to be our next logical levels up. So we marked 6350, we hit that. We're consolidating around there now. 6400 is next. 6450, 6500 is going to be a big one up there and would be an ultimate upside target. To the downside, our levels remain the same. So actually, if we break below this swing low right here, 6241, then that would be really a signal to target our downside levels below. So breaking again below this swing low here, this tail of this candle, would target these lows below us. 6,200 is a big round number, but really this support level here in the 6120s could be levels to the downside. And then 6,000 is sort of the beginning of where this recent rally has taken. That would be another target to the downside. And then way down here, we still have this gap, which would be in play if we got a significant downside move. But for right now, the markets are coiling, right? So markets move from balance to excess, right? So you have excess is essentially when you're trending in one direction. Balance is when you are consolidating and developing what many traders would refer to as a value area. So traders, buyers and sellers are finding value in the range really between, call it the 6250s and the 6350s, right? 100-point large consolidation range in here is really our value area. Markets consolidate and then they extend. So we're essentially coiling up for a move, either the next leg higher or a leg lower. And we could get that this week because if we look at what we have, first we'll just look at our events. Economic events, not a whole lot coming up this week. We have, just our regular economic data, unemployment claims, PMI. So I've established in previous newsletters our view on economic data where bad news is good news, right? If the economy appears to be doing worse, unemployment claims go up. Manufacturing PMI is below 50, which it's currently been above 50. But if it's below 50, that would not be good for manufacturing PMI. So currently it's good. Unemployment claims, of course, we don't want those to go up. If they do, if unemployment claims go up, if manufacturing PMI decreases, that signals a weakening economy, which pressures the Fed to lower rates. Right now, the economy is pretty healthy, and so the Fed hasn't really had that pressure to lower rates. That's why they've kept them higher for longer. But lower rates are good for the stock market, at least in the short term, right? Now, what is really driving? Because the market's at all-time highs now. So, what does the market really care about rates right now? It's kind of moved past it, I would say. And what's going to be really driving the market this week is going to be our earnings, right? So we kick off Q2 earnings season, and earnings have been being reported, but we had the financials last week, the big financial companies. This week we start to see some big tech, and big tech is the most prominent driver of our market indexes right now. They make up the largest portion of the NASDAQ and the S&P 500. So today, Monday, we don't really have much. Tuesday, we get some value companies, Coca-Cola, Philip Morris, RTX. Wednesday is going to be a big day. We have Alphabet reporting earnings. That makes up roughly about 30%, 30% of the market is tech in general, but Alphabet being one of the big top 6, top 7, really could even put them in the top 5 companies that are going to be reporting that exist within the sector. Obviously you have the big tech names: Apple, Amazon, Google, and then Tesla. Tesla is reporting earnings also on the same day. So Wednesday is going to be a big day for earnings. It could definitely move the market this day, right? People are going to be seeing how Alphabet is adapting to AI. Tesla is of course a big one, so we'll be looking out for that. ServiceNow is also not as big of a company, but definitely in that sector of tech. We have AT&T, also a big company. So definitely a lot of earnings coming out on Wednesday. Thursday, not too much in terms of we do have Intel, so that's one, not as big, but we do have Intel. And then Friday, not a whole lot. So Wednesday is going to be our big earnings day for the market. That could trigger, I would say, the next leg of this market. My bias is going to be higher. I think this market can still go higher. I've seen it happen before. All-time highs doesn't mean we can't get more all-time highs. What happens is people get FOMO, and they continue to buy into this market because they see and hear that it's at new highs, new record highs. You got to be in this market. It just keeps going higher and higher and higher. People want to buy it. This is the retail mentality. So my bias is going to be, since we're still in summer, a continued slow grind higher and higher. Just little, choppiness, kind of sideways, but slowly grinding higher to where at the end of the week, we get some higher numbers on the board. But generally right now, this value area is 63.50 to 62.50. You could call it 62.40 is going to be our main range that we need to hold. And then anything below 62.41 could trigger these downside targets. I'd first target this 61.50, 61.27, that area there for the downside. So that's going to be it this week. So again, kind of a quiet week, other than Wednesday being a real big earnings day that we could see a shift in the markets. So be looking out for Wednesday earnings. Other than that, I'm expecting, in terms of short-term trading, probably going to be pretty quiet Monday and Tuesday. We'll see what happens Wednesday. Could get some action later in the week. But a lot of short-term trading, if we're looking at it on a week-to-week basis, is knowing when to hold them, knowing when to fold them, right? So if there's not a lot happening, you don't have to make trades. Again, it's summer, so things are typically lower volume at this time of year anyway. All right, so that's pretty much all I had for today. And thank you for watching. Again, like, comment, subscribe to the YouTube channel, and subscribe to the weekly newsletter. And give me comments. Let me know what else you'd like to see. If there's more listeners here, more subscribers here, I might want to do some more reports maybe during the week, maybe a midweek report or something like that. And let me know what questions you'd like to have. Maybe let me know what you are seeing in the markets that I missed. What concerns you, what's on your mind. Let's make this interactive. So again, Dalton Grados, and I will see you guys next week.